Welcome to a deep dive into the world of cryptocurrency. Whether you are here to learn, to explore, or simply to relax, this is your space. Crypto is a world of highs and lows, of innovation and uncertainty. But tonight, as you listen, you can let go of the noise. Let's take a slow, steady journey through fascinating stories, the rise and fall of fortunes, and the evolving landscape of digital finance. The origin of crypto. Let's start from the beginning. Before the hype, before the millionaires, before the crashes, the year was 2008. The world was in financial crisis. Banks were falling, governments were bailing them out, people were losing trust, and then a single white paper appeared. A 9-page document written by an unknown figure, Satoshi Nakamoto. The title Bitcoin, a peer to peer electronic cash system. Just words on a page, but words that would change everything. Satoshi's vision was simple, a form of money that needed no banks, no middlemen, no government control, a currency that belonged to the people and is for the people. Bitcoin wasn't just a new technology, it was a rebellion, and like all revolutions, it started quietly. The first Bitcoin transaction happened in 2009. Just a test, no value, just an idea. But ideas have power. And soon, the first ever Bitcoin trade happened. 10,000 Bitcoin exchanged for 2 pizzas. A joke at the time, but today, those 10,000 Bitcoin would be worth hundreds of millions of US dollars. This was only the beginning. Bitcoin was no longer just an idea, it had entered the real world. Early days of crypto, a wild west. Bitcoin was small, a niche project, but in the shadows, something was growing. In 2011, the Silk Road was born, an online marketplace that operated in the dark corners of the internet. You could buy anything. No banks, no oversight, just Bitcoin. Governments noticed, and soon they shut it down. But the message was clear. Bitcoin wasn't just an experiment anymore, it was real. And then came the first major crash. Bitcoin reached 30 US dollars and then fell to $2. Panic, fear. Was it dead? No. It was just getting started. The cycle had just begun. Boom and bust. Up and down. It's a pattern that would repeat for years to come. The rise of altcoins. But Bitcoin wasn't alone for long. New coins emerged, Litecoin, promising faster transactions, XRP, built for banks, and then in 2015, Ethereum arrived. Not just a currency, but a new way to build on the blockchain. Smart contracts, decentralized apps, the foundation of DeFi, NFTs, an entire economy yet to be imagined. Ethereum changed the game. ICOs were born, initial coin offerings, projects raising millions and millions in minutes, new tokens, new possibilities, and yes, new scams. Money was flowing, fortunes were being made and lost overnight. This was the new gold rush. The biggest scams and failures. With every new opportunity comes greed, and crypto was no exception. 2017 BitConnect, promising guaranteed returns, $1 billion scam, one of many. Terra Luna in 2022, a stable coin that wasn't stable. Billions wiped out in days. And then the fall of FTX, a company that seemed too big to fail. Yet in just 1 week, it crumbled billions. One. But every crash, every scam, every disaster has only made crypto stronger. Bitcoin has died 100 times and yet it's still there. Still growing, still evolving. Where is crypto going? So, where does this leave us now? Crypto is no longer just an experiment, it's being adopted by banks, corporations, even governments. Regulations are coming, mass adoption is closer than ever. But the question remains, will crypto fulfill its promise? Will it truly be the future of money or just another bubble waiting to burst? The truth is, no one knows, but that's what makes it exciting. This is financial revolution still in motion, and you are part of it. As you drift off to sleep, remember, markets rise and fall, fortunes are made and lost. But through it all, the blockchain continued. Bitcoin still mines its blocks, Ethereum still processes transaction, and somewhere a new idea is being born. An idea that might change everything again. Sleep well and dream of the future. But let's take a step back and really think about this. Why does crypto react so violently to global conflicts? Why do we see these massive swings, panic sells, and sudden pumps whenever a major war, invasion, or military conflict occurs? It all boils down to three key things: fear, liquidity, and speculations. Let's talk about fear. Fear is the most powerful force in financial markets. It can cause billionaires to liquidate everything and small time investors to panic sell at the bottom. War, conflicts, and political instability triggers a unique type of fear, one that makes people question the very stability of their money. When banks, governments, and economies become uncertain, the natural reaction is to move assets somewhere safer. This brings us to liquidity. When conflicts arises, institutions, hedge funds, and even regular retail investors pull their money out of riskier assets. Stocks, crypto, and even certain commodities get dumped. They want cash. They want dollars. They want something that feels safe in a moment of uncertainty. But here's what things get interesting. What happens when cash itself doesn't feel safe? In countries directly impacted by wars, banking system can collapse overnight. Inflation skyrockets. Local currencies gets destroyed, and that's where crypto comes in. Bitcoin, for example, was literally designed for moments like this. A borderless, decentralized, non-seizable store of value. In war-torn regions, when people can't access their bank accounts, they turn to crypto. We have seen this in Ukraine, Venezuela, Lebanon, and even Russia during sanctions. But here's the catch: not all crypto benefits the same way. While Bitcoin and stablecoin tend to see inflows during time of crisis, all coins get obliterated. Investors move away from risk on assets, which means speculative meme coins and low cap tokens get massacred as liquidity drains from the market. Let's look at some real examples. First, Russia Ukraine war. Bitcoin initially dumped 15% in the day leading up to the war as panic spread. But within weeks, Bitcoin surged back up as Ukrainians and Russians moved billions and billions of dollars and Russian currency into crypto due to banking restrictions and sanctions. Tether, USDT, the stable US dollar coin. Trading volumes skyrocketed in Russia as people rushed to convert rubles into stable coins. Second, Iran and Israel tensions ongoing. Every time geopolitical tensions flare up in the Middle East, oil prices surge and Bitcoin sees wild volatility. Sanctions on Iran have pushed more underground crypto adoption when an estimated 8 billion US dollar moved through USDT despite restrictions. That's crazy number if I may tell you, bro. That's crazy numbers. Taliban take over Afghanistan. The Afghan bank system collapsed overnight. When the Taliban seized control, citizens lost access to their money, and Bitcoin became one of the only ways for people to preserve wealth or send money abroad. War is a liquidity event. Markets get shaken, money moves fast, and if you understand the patterns, you can trade ahead of the chaos. How to profit from war driven volatility in crypto? There are three core strategies when it comes to trading crypto in wartime scenarios. Short the initial panic dump. The first wave of selling happens before the war officially starts. Investors fear uncertainty, so risk assets dump hard. If you're quick, you can short Bitcoin, Ethereum, and high beta altcoins for easy gains. Long BTC and USDT pairs in affected region. Once the panic settles, people flock to crypto as a hedge against falling banking system and inflation. This is when you start seeing Bitcoin pairs surge, along with stablecoin premium in local markets. Example, in Russia, USDT was trading at 30% premium after sanctions hit. Third, avoid meme coins and risky altcoins during conflicts. The worst place to be during geopolitical instability is highly speculative low cap coins. These projects rely on retail speculations, which dries up during time of fear. Stick to Bitcoin, Ethereum, and select blue chip cryptos if you want to survive the storm. War doesn't just move market, it reshapes them. When global conflict escalates, it creates winners and losers in crypto. The trick is knowing where the money is flowing and positioning yourself accordingly. This is why traders who understand macroeconomics, geopolitical trends, and historical market always stay ahead of the game. Here's the final thing to think about: the future of war and crypto. We are entering an era where crypto itself will become a weapon in global conflicts. Governments are experimenting with CBDCs to control money flows during wartime. Cyber warfare will increasingly target blockchain networks and DeFi protocols. Nation under sanctions like Russia, Iran, and North Korea will use crypto to bypass financial restrictions. This isn't just a theory, it's already happening. So, a trader, investor, or just someone watching the space, you need to be ahead of the curve. Where there is chaos, there is opportunity.